Hey guys, this is Chris Dewey with River Medicare Advocates, where we educate, we help you understand Medicare, we help you avoid mistakes, we help you save money, and above all else, we're going to empower you to get the most out of your Medicare benefits. So today's topic is, what is the number one danger when choosing a Medicare supplement? Some folks worry about, oh no, I don't want to pick a company that might not be around in 3 or 5 years. It's not financially stable. You don't need to worry about that. Not be able to pay their claims. You don't need to worry about that. The kind of companies that River Medicare deals with are companies that have been around and have been in existence for 50, 100 years. We're talking companies like Omaha, Humana, Aetna, national carriers that are financially stable and have an A rating. So although you might worry a little bit about, is this company going to be around 3, 5, 10 years? The biggest concern that you have to have is the biggest issue is the stability of rates. What's my rate going to be in 3 years? What's it going to be in 5 years? What's it going to be in 10 years? So it's the stability of the rates that's the number one danger. Okay, it's what we're concerned about. Rate stability. Future rate stability and rate increases are the number one criteria, the biggest concern that we're going to look at when we pick a Medicare supplement. Okay, so now when you buy a Medicare supplement plan, it's always going to be a letter. There's 10 letters. You can see them right here. The most popular plan is the Plan G, actually, and then there's so many people are now getting the Plan N. Plans have the most failure. They're the most popular plans. So when you buy a plan, you got to remember these plans are standardized by Medicare. So that means Medicare sets all the rules for the bills that are going to be getting paid, the kind of coverage that you have. So regardless of what carrier you buy your supplement from, since the plans are standardized, those plans are going to pay the same bills, same types of bills they're going to have identical benefits. If you get a Plan N with Humana, it's going to offer identical coverage. There's no difference in the coverage from a Plan N with Humana versus a Plan N with Blue Cross or United Healthcare. If you get a Plan G, those benefits and coverage are standardized. So there's the Plan G is identical with the Humana as it would be with Blue Cross or AARP or Mutual of Omaha, across the board. So the only difference between these plans of the same letter, the big difference is going to be the stability of the rates. Okay, so now anytime you buy a Medicare supplement plan, any of these lettered plans, you go into a pool or a group. So let's say you get the Plan G. You're going to go in the block of business that all the other folks that got the Plan G right around the same time you did, you're going to go into that pool. And once you're in that pool, we're going to establish, the insurance company is going to establish what your initial rate is. Now, your initial rate could be determined one of 3 ways. If you live in New York or Massachusetts, they use the community price, the community age. So what that means is, regardless of whether you're 65, 66, 67, 77, regardless if you're a female or a male, regardless if you're tobacco, doesn't matter. Non-tobacco, tobacco, you're all going to pay the same rate. Whether you're 70 or 90 or 65, tobacco, doesn't matter. You're all going to pay the same rate. Very few companies use the community model. So let's move on to how to get the initial rate using the attained age. In South Carolina and Georgia, most states, it's either going to be the attained age or it's going to be the issue age. What do I mean by that? So, carriers give us a variety of rates with the attained age based on ages 65 to 105. They're going to look whether or not you're a female or a male, whether you're tobacco or non-tobacco. Annual increases will go up as we attain a new age. As you attain from 65 to 66, you're going to have a little rate increase. Now, if you are, let's say, 65 years old, you're 65 years old, you're a female, and you're non-tobacco. Based on the Attain model, you're going to pay $100. Let's just use that as an example. 100, it's easy math. But if you're a 67-year-old male smoker, you're going to pay $120 because they look at the male-female, how old you are, and tobacco versus non-tobacco. All right? So 65-year-old female, non-smoker, 100. 67-year-old tobacco male, 120. Now, let's look. Okay, guys. So every year with attained age, every year you attain a higher age, your rates are going to go up somewhere between $4 to $6 a month, $40, $50 a year. And the reason why is because medical inflation, because of inflationary pressures and increases. So each year you get older with attained age, you're going to have a little bit of a higher premium. Now, the second way that insurance companies can raise your premiums is through the issue age. How do I explain that? Well, with issue age, what they're going to do, they're going to, for instance, a 65-year-old female non-tobacco, instead of 100, they're going to start you off a little bit higher at 120. Instead of for a 67-year-old smoker who's a male, instead of 120, they're going to start you out at 140. Why are they going to do that? Because with issue age, they can't increase your premiums every year you get older. What they can do as a group, as a whole, they can increase everybody that's in the Plan G a certain percentage up. They can increase that based on the whole block. Not based on your age, but based on the block of business, for instance, the Plan G. So all Plan G people with issued age, maybe 3 years down the road when you're 67, they'll increase the whole block of business, say 8 or 9%. So that's why they start this a little bit higher than the attained age, because with issue age, they are not allowed to increase your premiums every year you get older. But what they can do is increase it for the whole group. They can increase your premiums for the whole group, and that can affect your premiums as well. All right? Okay, so let's talk. Let's talk about why there would be a rate increase. So here we have a 65-year-old who's paying $120. It's an issue age policy. So it starts out a little bit higher at 120. This guy's paying 140. He's a male tobacco user, issue age. So where does that money go? Those premiums go in here into the pool, and they come out here to pay for claims. So what we're doing is we're taking our premiums, we're transferring that risk to the insurance company. The insurance company is going to use those premiums to pay MRIs, CAT scan, hospitals, surgeries, blood work. All right, so that's where all that money is going to go out in claims. Now, let's say that over the course of a year, that claims, the insurance company is paying 5% more in claims than getting premiums, and it happens all the time. So what's going to happen is that 5% that they're paying over what they're getting in premiums, the 5% they're paying in claims, MRIs, hospital, etc., they have to go to the insurance commissioner, and he's got to okay the increase. Once he okays the increase, based on the fact that they're, let's say, 8%, they're 8% over, the insurance company is paying 8% more in claims than they are in premiums. Once the insurance company okays it, then they can increase those premiums. So what we found is the larger the pool of people, the more the risk is spread across, the more stable the rate increases. So here is a smaller pool of people. Let's say that green square is the Plan F, folks. Not as many people in the Plan F as the Plan G, because the Plan F is no longer offered to new, healthy 65-year-olds. So this pool of people, let's say this is the green, is the Plan F. Less people, older, sicker, more claims. Plan F's probably going to have more increases, all right? Now let's say this is the smallest pool of people, the Plan N. Just because it's the smallest pool of people doesn't necessarily mean it's going to have higher claims. In fact, I'm going to show you in the next video why the Plan N makes more sense, because it's a healthy pool of people compared to the Plan G, not as many claims. People in the Plan N, typically, they all have to go through underwriting, whereas the Plan G, anybody who's sick can get a Plan G if they get a guaranteed issue right. And I don't want to confuse you, but just remember, we do want to try to get a larger pool of people with a stable big carrier like Aetna or Omaha or Humana, because the larger the pool of people, less risk is spread over that. So larger pool, typically better. However, again, there's other factors involved, all right? Okay, guys, in conclusion, this is what you want to do. Just as an example, the Plan G, they look at the pool of people. they're finding out more and more that with the Plan G, there's a sicker pool of people. So they realize there's an 8% loss. They paid 8% more in claims than they got in premiums. So again, what they're going to do, the insurance company is going to petition, they're going to send this 8% loss to the commissioner. He's going to okay an 8% rate increase. Once he audits and makes sure that everything's on the down, is on the up and up, he's going to increase that 8%. So that 8% increase is going to go for some people that have never filed a claim, but they're in that pool of people, or people that have really bad cancer, they're going to get an 8%. People that are healthy, they're going to get 8%. Everybody in that pool of Plan G folks is going to get an 8% increase. So what we want to do to mitigate these increases is find a Aetna or a Humana or a huge pool of people, and we want to find a Medicare supplement plan letter. I'd say the Plan N, I won't say, the Plan N definitely has a healthier pool of people than the Plan G. The Plan N has less claims. The Plan N requires underwriting for all people, whereas the Plan G requires they must take sick people that lose their Advantage plans or group coverage, a bunch of different things. So the Plan G going forward is going to have more claims, higher premiums. In my next video, I'm going to break down why the Plan N is getting a much larger group of people each year. They're healthier. And again, anybody that goes in the Plan N must pass underwriting unless you're in the first 6 months of when you turn 65. Plan G, you can get a Medicare supplement Plan G, and you can have cancer or HIV as long as you get what's called a guaranteed issue. And I don't want to go into that today, but again, give us a call, 843-227-6725. Okay, and guys, if you click on the next video, it's an incredible study, an independent study done by Cigna. Cigna is going to break down what we just talked about. What we just talked about as far as healthy groups of people versus sick groups of people, how that this insurance companies are going to be pricing out rate increases over the next few years based on the Plan N versus the Plan G. The Plan G has an adverse selection type of a situation where there's going to be hundreds of thousands of people with cancer, AIDS, chronic conditions that are forced into the Plan G. The Plan N won't take them. The Plan G must take them because of what's called guaranteed issue. So watch that next video if you want to know why the Plan N has a healthier pool of people than the Plan G. All right? Have a great day.